Good morning, traders. It is 8:02 a.m. Chicago time on Monday, the 5th of June, 2023. I'm going to ask you for a mic check this morning. I'm on a brand new super powered laptop here on my home workstation, and I'm not sure how tuned it is. This is episode number 2476. It is June 5th, 2023. See, I'm still stuck in May. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's take a look at our chart here. The convergent trading pre-market summary sheet this morning shows a mixed open, just a tiny tinge of a tilt to the risk off side. Nothing major in terms of earning today. The big news today, or the big kind of driver today, is really Saudi Arabia announced that additional 1 million barrels per day oil production cut in July is likely, while all other OPEC plus producers agreed to extend earlier cuts through the end of 2024. So Saudi Arabia is going to want to maintain its stranglehold on the oil market. I don't want to say the fact is, because I don't know if it's a fact, but it's I've read that Russia's been cheating on the quota because it is scrambling to pay for this terrible war that it's got going on. So oil's been a very interesting story so far this year. I've talked about it quite a bit. U.S. President Biden signed the bill raising the debt limit into law on Saturday. Large U.S. banks face potential 20% hike in capital requirements. Apple expected to reveal mixed reality headset at annual Worldwide Developers Conference, big conference. And so that's where we are. Now, the question of whether the sound is good or not, it's as long as it's not distorted or clipping. Generally, it's actually, this is way hot. Actually, I just looked at the scale and it is pretty hot. Let's see, let's go down to 90%. This should make it a little bit better. Okay, so what's left for today? Well, let's look at what we've had this morning. Did I do this? Oh man, hang on one second. You know, messing around with a brand new laptop first thing in the morning, probably not good for your health or your ulcer, which I don't have, but I don't want to develop one. But it looks like the TraderByte page on EdgeClear's website was not updated, and I'm gonna do that now. Yes, okay. So sorry about that, folks. A lot going on all at the same time. Okay, so let's look at what has come out today. Really, actually, because it's Monday, let me tell you what's going on for the week. Okay, so today we did get balanced trade out of Germany. Balanced trade came in strong, 18.4 billion euros for April versus 16 billion expected. The prior is 14.9. Good growth there. ISM services PMI comes out this morning at 10. We do have ECB's Lagarde here speaking as well. But what's hot for the week is the balance trade out of Germany is already passed. We have ISM services PMI. We have the RBA interest rate decision out of Australia this evening as well. Tomorrow we get the IVPMI of Canada, GDP growth Q on Q out of Australia, balance trade out of China. And then Wednesday we get balance trade out of the US. We get balance trade out of Australia on Wednesday. And then Thursday, important number, the inflation rate out of China. And then Friday, the unemployment rate out of Canada. So nothing earth-shattering here for the week as we go through the week. And you know, Lagarde speaking. Lagarde's kind of been interesting. She's been just a bit of a repetitious, nothing telling you a whole lot of nothing type of thing. So I'm not sure how much the market will pay attention to that. Of course, if you're trading the euro US dollar pair, the 6E contract, then you need to pay attention to that. Other than that, really not seeing anything significant for the entire week, which makes me wonder: does the market move under its own power here, and we get some clean trading, or do we get a grind? Here's the Fed Watch tool from the CME. I want to point out that I think I might have shared this on Friday or Thursday to show that earlier in the week we had a 30% chance that the June 14th meeting would would hold, and about a 70% chance that the June 14th meeting would hike 25 basis points. And then by Friday, uh, it was more than the reverse. Currently, about 76% is being priced into the Fed Fund futures that rates would stay stable, that the Fed is likely to hold at 500 to 525 basis points, and there's a 24.1% chance, 24% chance that they would hike 25%. It's a big deal for the market, and in my opinion, this is already priced in to the action that we've seen. We've come a long way. So let's pop into that. Man, it's really bizarre having these different controls. So let's pop into that here. We've had some decent runs here coming into the beginning of the month, and then Friday left the gap open. So we had a gap situation, gap and go day, and then the target was 91 and a quarter, which is exactly where we are now. That was the last high before the 4,300. Friday I ended up putting in the 4,300, but Friday it actually had pretty decent structure on this profile. Like it was very methodical in the way that it did this. So if we look at what happened here on Friday, we have a few single prints down here at the 75, 42.75, which is the key target to the downside currently, that we would close those singles right here. You can see the shaded zone. But overall, pretty healthy rally, and what the ES is doing is essentially catching up with the NQ. This is RTH only, by the way. Here's the NQ. The NQ's been a runner for some time. The NQ started running in the middle of May and continued running into the end of May while the ES was sitting sideways. And since then, ES has been running while the NQ has been balanced. The NQ put in a very balanced profile on Friday. And we're trading settlements. We're unchanged right now. The market condition currently looks to me like it is a bit of a wait and see. So when we look at what these things are doing here, it just looks like we broke out of this tight range. We moved away from the 4140 and 4024 on the S&P, which are the two key high volume nodes. And we've broken the balance range, and we are running just like we would expect, like I talked about 2 weeks ago or so, that whichever way it breaks, that's the way it's likely to continue to go. So that's nothing new here. This is a rally market, which means that ranges and volumes and volatility is likely to compress. Tougher for us day traders. To read, in my opinion. The Russell finally breaks out of this balanced range on Friday. The Russell might see some pretty decent opportunities now as the market sees less of a risk overhang, be it the fiscal cliff in the debt ceiling, be it the interest rate issue. It's able to it's now able to, investors can jump into these smaller stocks. Remember, the Russell 2000 is made up of 2,000 small stocks, and this is where you kind of get the most bang for your buck. It's interesting because the S&P's performance this year to date has been carried by 7 companies and has been dragged by 494 companies. Uh, it's kind of interesting that if you look at the 7 companies that are controlling these indices are overcoming the aggregate performance of the other 494, which is just kind of crazy how concentrated the market is. I'm not going to read too much into that. I'm not an analyst. I have no idea what that means really, but I felt that it was really important to consider that, man, it takes. Now we have companies in the S&P, not banks, but companies, actual companies that are likely to be too big to fail. The key line in the sand, or the key zone today, that we have to concern ourselves with is this single print zone of about 4278. 4278 to 4275 right down here. This zone here, as long as we stay above, we're very likely to just continue higher. Looking at the overnight action in the S&P, here's the run up on Friday. Looking at the overnight action, it pulled back to 4280. The area that I talked about is basically right there at 4278, down into the IB high of about 4274, 4275. And what we have is the point of control and um, the profile imbalance, which I actually forgot to cover here. The auction condition is balanced, volume's 161, which is low. The inventory is not updating for whatever reason. It's not 0%. And the range is awful. So, just coming into today, just the Monday after non-farm payrolls, generally not a huge breakout day, or not a huge opportunity day. And we are opening right on top of the overnight point of control, right around settlement, with VWAP and mid, session VWAP mid in the area. So we've got this kind of cluster, kind of a poopy sandwich between 4287 and about 4290. This area here is kind of keep your hands off of it type of a zone. So that's what we're looking at here in the S&P. The NQ, let's enlarge. NQ, a little bit more activity in the overnight session. The NQ showing a little bit of strength. The point of control is below the full session mid and VWAP, and it looks like it wants to attack the high. The NQ had a huge, just a massive reversal on Friday and just sideways. The NQ appears to be coming into balance from just early signs of what's happening here. The NQ just seems to be seeking out balance. Again, the S&P had this drop in continuation. Not seeing that in the NQ. Not seeing that in the NQ. Remember, the S&P took out the high, pulled back, took out the high, and continued. The NQ was unable to do that. Early clue that the price discovery from the buy side is actually relatively weak-ish in the NQ, and we are just below the point of control of Friday. So 14,580 in the NQ is going to be important this morning. That's your line in the sand. It's going to have to overcome this section right here. This is going to be most likely going to be its key resistance. So in my opinion, the initial test of the point of control sets up a short in the NQ for a pushback potentially to VWAP mid. Once that gets extended, if those get extended, they'll be up here somewhere. The first trade in the NQ looks like it's likely to be around the 14,580 and back. And then if it takes out the other side of this box, if it gets up above 14,605, I just don't want to say the thousand handle. I'm just going to say 605. If it takes out the 605, then you probably have a runner in the NQ. If not, then it's likely to turn lower on a test higher as it's trying to do now. And if it just comes in here and just goes sideways and doesn't turn, you might want to consider your chop trading plan, or better yet, no trading at all in the NQ. Crude has been extremely interesting, as I've said many, many times. Here it is, just popping higher. Crude went and retested that excess low and filled in some of the thin parts. So let's look at this here. So crude actually got below and into this excess low underneath, and has bounced back up into the middle range here. So what crude is doing, crude is saying we like value in here. So crude likes 70 to 74, and that's where we are now. We're trading 73.64. The next box up starts at 74 plus. It's got a lot to clean up in terms of points of control. You can see these lines being carried forward. So crude is very likely to just slush around in here a fair amount. So if you're watching crude, of course, I highly recommend that you don't trade the CL contract, but to trade the MCL, which is financially settled. In my opinion, much safer to trade. So that's the sweep. Getting back to the S&P and what we've got for today. So if we look at the ES, we've got quite a bit above us. Here it is. It's trying to run. If we look at the ES, to me, it looks like it is likely to be a choppy open. We're opening right against the balance, looking for it to actually respond. It's likely to push the high here into the open or right after the open, likely to fall back through, consolidate for quite a bit, and then expecting it to continue. The S&P ran out of time on Friday. This is an incomplete auction. The point of control is in the upper quartile of the range on a very clearly trending day, and it ran out of time, and it's very likely to retest that high from Friday. So I'm expecting it back up to Friday's high, which is at 97.75, and I'm looking for it to kind of poke up there, and we have a gap zone right in there from August of last year. So we're looking for this gap zone to be filled right here. That's what I'm looking for, as a scenario one play in the S&P. If the S&P opens, tests up, comes back in, goes back to the point of control and mid, and starts falling from there to check the other side of this overnight zipper, basically. If it does that, then there's a pretty good chance that we will find ourselves down at 74. This is supposed to be a 7, not a 2. 74, pretty quick bounce, consolidate, and most likely take some of this rally back. This is what I'm looking for this morning. Let's take a look at the relative delta to see if there are any clues there. So looking at relative delta, everything is positive this morning, but not by much. Very large lots participating with the small lots. The governing participant is a small lot. These are 9 contract or less orders to buy that are causing this positivity. Again, this is using MBO data, processing MBO data, so it's very accurate. It's not a reconstructed tape or whatever, which to me is a guess. This is actually pulling from the exchange to see which orders have triggered, and then it assembles those orders together into a single contiguous block, and then breaks it up into small, large, and very large. And the breakup here, small is anything less than 10, so up to 9. Large is 10 to 99, and then very large is 100 plus, greater than 100 plus, greater than and equal to 100. Okay, and then what we do is we track how those are participating in the overnight session. Are they on the same side? Are they canceling each other? Sometimes we see small lots coming in strong, but we see large lots going in the opposite direction, and that tells us something as well. Here's an example of that actually. This is, remember what I said about the NQ, it seems to be balancing. There's your large lots lifting, there are the small lots selling, and then the cumulative delta, because the very large lots are flat, the cumulative delta is actually negative. So this is a market that is very likely to do some of this dance this morning. Okay. Anyway, hope you gleaned something from that. We've been on for about 20 minutes. I'm going to let you go. Good luck, and I will catch you tomorrow morning. Don't forget to hit the like button. Don't forget to hit the subscribe button before you leave. And if you have not subscribed to the channel, which is free, you can just go to ft71.com/YouTube and confirm your subscription. I'd appreciate it. It makes the channel easier to find. Good luck.